If I lost everything today, my bank accounts were wiped, my assets were gone, and I only had $1,000 left to my name, I would not invest it the way most finance YouTubers tell you. I wouldn't put all of it into the stock market. I wouldn't touch crypto first, and I definitely wouldn't chase passive income immediately. Most of the advice you see online assumes you already have a stable life and a massive surplus of cash. But when you are starting with your first $1,000, the rules of the game are completely different. If you follow the standard advice of just buying an index fund and waiting 40 years, you are going to be waiting a long time to see any real change in your quality of life. Today, I'm going to give you a step-by-step roadmap on how to invest your first $1,000 in a very specific order. This is the exact blueprint I would use to give myself the highest chance of building real wealth fast, avoiding the traps that keep most people stuck in the middle class for decades. The final category I'm going to share is the one that actually changed my income permanently. And it's the one almost everyone skips because it doesn't feel like investing. Most people think investing starts with a brokerage account and a ticker symbol. They think the reason they aren't rich yet is because they haven't found the right stock or the right moonshot coin. But the real issue for most beginners isn't their portfolio, it's their foundation. The real problems are usually low income, a complete lack of specialized investing knowledge, and emotional decision making driven by the fear of missing out. We've all been there. You see a headline about someone making millions on a meme stock, you throw in your $500, and then you panic when it drops 20%. You're trying to get rich too fast because you're tired of being broke. But that desperation is exactly why most beginners lose their motivation. They invest $100, check their app every single day for a month, and realize they made maybe $1 or $2 in gains. It feels pointless. Be honest with yourself. If you made $7 from investing this month, would you stay consistent? Most people wouldn't. They'd quit because the reward doesn't match the effort. That's because the first $1,000 is less about maximizing your annual percentage returns and more about maximizing your personal leverage. Here comes the huge mindset change. Your potential to earn additional income is your best early investment, not a firm. Our view of building riches from start must change. Consider the math. If a stock returns 10% on $500, you make $50 a year. I like that, but $50 doesn't cover rent. It doesn't buy an automobile. Your life is unaffected. Spend that $500 on a skill that earns you $500 extra per month, and your return on investment is unlimited. Your earning power has increased 1,200% annually from 10%. We should first focus on skills, processes, and income growth, then traditional investing once the engine is going. To never start over, I would divide $1,000 like this. Start with $300 for your emergency buffer. That sounds boring. Not a get-rich technique, but a stay-rich one. Most newcomers fail due to financial instability, an unexpected tire blowout, medical cost, or sluggish month at work forces them to sell their investments at a loss to survive. This is panic selling by necessity, which destroys wealth. Putting $300 in a high-yield savings account or a separate cash reserve that you never access is psychological insurance. This money protects your investments from life's inevitable events. Financial security buys peace of mind. You are a gambler waiting for a poor day to wreck your efforts without this cushion. With this modest cushion, you may be patient and logical with your money. The biggest portion is $400 for skill investment. The highest ROI category exists. Your greatest asset if you're 18 to 50 is your capacity to trade talent for capital. This $400 would go toward high-level classes, software, or books that teach me a direct, high-income talent. Sales training, video editing, AI tools, copywriting, and digital marketing are examples. These abilities are in high demand by corporations. Consider the change. A $50 editing course could rake in $500 per month. Understanding copywriting psychology may beat practically any stock portfolio in the short run, since you can use it to any business or career. Someone turned a $200 certification into a $20,000 raise. Build wealth from scratch that way. Because of your increased value, you push the market to pay you more than 7%. This $400 can start a higher wage or a freelancing promising business that generates cash flow to invest more later. Now that we have a safety net and a plan to increase our income, we take $200 for actual investing. This is where we build the habit. Even though $200 isn't a fortune, the purpose here is to learn the mechanics of the market. I would put this into broad market index funds or ETFs. This is about dollar cost averaging and developing a long-term mindset. You need to get used to the feeling of your money moving up and down without your heart rate moving with it. The amount of money matters far less than the habit of consistency. Most people quit before compounding even starts working because they don't have the discipline to keep going when the numbers are small. By starting with $200, you are planting a tree that will eventually provide shade, but you have to be okay with it being a sprout for a few years. You are building the muscle memory of an investor so that when you eventually have $20,000 or $200,000, you won't make rookie mistakes. The remaining $100 goes into an experimentation fund. I named this Curiosity Lab. You can lose this money. It can be used to test a small business idea, run a few digital advertising for a product you're interested in, buy a small quantity of crypto, or start a content creation project. Learning by doing is the goal, not profit. This prohibits you from gambling $1,000 recklessly. Giving yourself a playground for curiosity lets you try new things without endangering your finances. You may spend $100 on a Shopify trial and simple designs to test product sales. Despite failing, the data and experience you get are worth 10 times the $100. You need a place to fail cheaply to succeed largely. As we go through this process, I want to prevent many mistakes I see people make every day. Avoid meme stocks and social media hot tips first. The chance is gone if everyone is talking about it. Second, avoid day trading. Most traders lose money to institutional algorithms according to statistics. Don't use $1,000 to outwit a supercomputer. Third, avoid pricey automated wealth courses. A $999 course that promises to make you a millionaire next month without hard work is a hoax. Fourth, and most crucially, stop buying liabilities to look successful. An expensive watch or pair of designer shoes with your first $1,000 is the fastest way to get stuck. Most people have discipline issues, not investing issues. They value feeling rich over becoming wealthy. What was your worst financial mistake? Bad trade, squandered purchase, or waiting too long to start? Share your blunders in the comments so everyone can prevent them. Nobody discusses the personal financial strategy secret that the initial $1,000 is symbolic. You won't buy a beach house or retire tomorrow with it. It proves discipline, delayed pleasure, consistency, and future optimism. You have the blueprint for $100,000 if you can handle $1,000 with this setup. You are showing yourself that you are now an investor who plans for life, not a consumer who responds. Your first $1,000 is meant to change your mindset, not make you rich. It transforms you from a worker to a moneymaker and a growth investor. Not showy, this strategy. It requires no complicated charts or overnight mooning. That's why it works. It's a practical, wise money management strategy that focuses on the only thing you can control: yourself. We reviewed the $300 emergency buffer for safety, the $400 talent investment for income, the $200 index funds for habit, and the $100 experiment fund for curiosity. This is how to lay a foundation for a future wealth skyscraper. Follow this and you'll become an investor, not just trying to invest. If you want to go beyond the basics and find the high income skills we talked about in the $400 category, you need to know which industries are developing quickest. The world is evolving swiftly, and new technology are replacing 5-year-old abilities. Look at how specialist knowledge is used in the digital age to find the biggest chances in today's market. Here's the secret to expediting this process and converting your first $1,000 into something life-changing faster than you expect. Start now, stay disciplined, and remember that yesterday was best, but now is second. You have the plan. Just start.